Tesla's up over 22% today, which is probably the biggest single day move for Tesla. I'm not 100% sure, don't quote me there, but absolutely insane. Trump goes ahead today, tells everybody to buy the dip, then decides to pause tariffs for 90 days on select countries, and the market goes absolutely insane. Now, we're going to cover a lot in this video, but the first thing I want to lead with is just the volatility in this market. You have to understand that this type of pullback that we have seen has been self-induced, meaning that there was no economic factor that has forced us into a recession, hurt the American consumer, slowed GDP, or anything along those lines. I mean, inflation is even coming down at a pretty steady rate. But all of the uncertainty that we have seen in the market, which, by the way, the market hates, has been because of this trade war enacted by Trump, which means that we could get right back to where we were just a couple of months ago if the self-induced tariffs were to be removed. Now, we're not talking about if I think that they're good long-term or short-term, none of that. We're not even going to get into the politics of it. But the whole thing I need you to understand is how fast the market could recover if they were to simply remove this policy. Because COVID itself was not something that they could just remove or get rid of instantly and not have it impact the economy, which makes this type of situation very, very different. Tesla itself has definitely been getting hit hard due to Elon's involvement in Doge. But as we know, he will be leaving at some point, probably in the next 4 to 6 weeks. Some people are saying that Elon himself helped to make Trump a little bit more open to removing tariffs and pausing them for a bit for negotiations, but who really knows? My point being that institutions stepped in today to show us that they are willing to buy the dip and face rip this thing into oblivion. Now, from a technical standpoint, we know that we are still within bullish structure. The reason that we know this is for two very specific and important reasons. Number one, if we were to take a Fibonacci retracement from most recent swing low to most recent swing high, price action is currently sitting between the 0.786 Fibonacci to the 0.826. This area is called the smart money zone. We made an entire course that's completely free so that you can learn how to do this on your own within 30 minutes, and it's in the description. When price moves into this zone, it means that we have sold off 80% within that range. Now, it does not mean that the asset itself has drawn down 80%. It means from the range that we just drew, 80% of that range has been drawn down. Very important to understand the difference. What we want to see from here is bullish accumulation happen on the BX trender, which is the indicator down at the bottom of your screen. When we begin to see higher lows form, and we're no longer seeing this massive sell-off to the downside, that means that buyers are stepping in and relative strength is building. That relative strength on top of that smart money zone, meaning buyers are stepping in a massive discounted range, is exactly what we want to see. Now, this bounce normally occurs about 65% of the time. Historically, for me, it's been about 62%. But what's very important here is the risk versus reward when you're taking that trade, meaning that if we would have bought at that smart money zone, which I got a little early, I went in pretty early back, at the end of February. But if I would have just waited until the smart money zone and set a stop loss at break of structure, which would be about 20% drawdown, our take profit zone would easily be back at $380, which is a 62% move to the upside, and higher highs would be a 100% move to the upside, meaning that my risk versus reward would be anywhere from 3 to 1, 5 to 1, and even 7 to 1. And when our accuracy is better than a coin toss and we have that type of risk versus reward, it makes our bets extremely potent. Now, I started buying some 2026 and 2025 calls back in February, and my plan was to start to go in there with about 20% of my planned position size and then start to add into that position when price pulled back into the smart money zone. But unfortunately, because we didn't fully confirm any type of bottom before the massive rip today, I did not get to average down the way that I wanted to. But fortunately, I did have my trading bots live today to catch some of the move, and they'll definitely be live going into the next couple of weeks. But even with a $20,000 profit today on Tesla, I am definitely still down across all of my positions in just the past couple of weeks. Tesla alone in just the past 12 months, we're still up over $1.7 million, and I'm holding right now about $120,000 in unrealized losses. So even if we were to just close that out today and walk away, we have given back such a small margin of the profits that we've made just since June of last year. So no matter how this goes, I'm not worried. With that said, my short-term resistance levels for this going into the next couple of weeks are as follows. The first level would be this weekly market bias up at $340. And so that means that we have, at least in my opinion, over the next month or so, another 20% move to the upside, which is why I'm keeping my bots on. I do think from there's probably about a 50-50 shot that we reject to come back down to test $280, but there's also that other chance that we could blow right through it and just push to all-time highs. So I think that once we start moving back up there, I might reduce some position sizing within my trading bots. But if we're able to confirm a higher low on the weekly BX, much like we are right now when the candle closes in 2 days, then I might look to average down on my 2026 calls and ride them back up to $360. I want to commend you guys for remaining patient and professional through the past couple of weeks and months. It is through these massive sell-offs that you get to see the true character of people and, more importantly, yourself in the market. And if there's anything that I try to push to you, is that there's nothing special about what we do here. It's just a very simple system with very simple rules. And I understand that I'm not here to min-max every single situation, try to time everything to perfection, because one, it's impossible. And two, I would just be a prisoner to the market. And that's not what I want to do. I won't want to spend my days sitting in front of a screen 15 hours a day. At that point, I'm just a slave to money, and that's not what I want to do. But everybody here has acted so professional, helped each other out anytime somebody has needed it. And to me, that is what makes me proud. That is what makes me happier than anything, honestly. Because what I do doesn't really matter. Taking money from participants in the market and trading doesn't really give me a lot of meaning. But being able to teach you guys and help you guys and enlighten you on this one specific craft that I've been able to actually master really means a lot. So thank you guys for all the support you have given me through the past couple of years, and let's have a great rest of 2025.